Good morning to all of you. This is Ranjan. Recently we have come with near about 34 different intraday trading techniques. All these techniques are being innovated by our team, and it has its unique feature. Out of all these things, I am going to present one most important intraday trading technique. This we have named as index decoupling strategy. This is one of the simplest strategy you can say. In this, you have to find out two different indices which will be decoupling with each other. Means one will be moving up and other will be moving down. Then only this decoupling phenomenon will take place. After finding out this decoupling indices, you need to find out four most active stocks in these two indices. Remember, you need to find out four different stocks from these two indices, and these four different stocks will be having different pricing actions, whether it will be having the trending action or trading action. The best case scenario will be choose any four stock which is be trading in terms of higher volume on that particular time. Now, using your technical tools, any of the technical tools, find out the potential resistance and support points for these four stocks. Higher the volatility, this strategy will award you more. If these prices will be in a range or trading band, or you can say volatility is constant for the day, then this strategy will award you moderate result. However, this is one of the most successful strategy for intraday trade. Let me take one example and define this strategy. Say on 14th August 2008, time around 11 AM, I have found out the IT index and the Nifty index is decoupling with each other. I have taken the time from 10 to 11 for my observation. In this time frame from 10 to 11, I found out whenever the IT index is going up, that time Nifty index was drifting down. And from these two indices, I have found out, or I have chosen four stocks randomly. These four stocks are the most active counters at that particular time. And these four stocks are DLF, SBI from Nifty, and Infosys and Satyam from the IT index. This period 10 to 11 AM period, its high and low I have recorded for all the four stocks, and we have a GAN calculator available in our website www.smartfinanceeducation.com. Using that same calculator, I have find out the resistance points and support points, three resistance points and support points. And I have recorded the 11:30 price of all these four stocks, DLF, SBI, Infosys and Satyam. So here my calculation ends and I have to take the trade decision. Before taking the trade decision, let me analyze the trade. In the SBI and the DLF pair, I found SBI is more weak as compared to DLF. Why? See, at 11:30, SBI was trading at 1487, which was its low, you can say, and which is just 2 rupees above its second support point. Hence, it looks weak for the day. If you see DLF was trading at 513 0.6, which is also just 1 rupee and 60 paisa above its low figure. However, it was much above its second support point, which is placed at 506. In both the cases, you just compare. SBI is trading at 1487. It is 2 rupees above its second support. DLF is trading at 513.6, which is almost 7 rupees above its second support. Hence, in a layman's attitude, I can say the DLF is more strong as compared to SBI. So if I want to take a decision or want to have a trade leg off between these two counters, I will choose to buy DLF because it is stronger, and I will sell SBI. Using the same logic, I have decided to buy Infosys and sell Satyam. And to make this method more simple, I have chosen one share each from all the counters. So choice is, I will be buying one share of DLF, I will be selling one share of SBI, I will be buying one share of Infosys, and I will be selling one share of Satyam. This is based upon the resistance and supports what I have derived using the Gann calculator and comparing with the current market price. Now see the result. This trade action is got completed at around 11:30, and around 12:30 I have recorded the prices of DLF, SBI, Infosys and Satyam, which was trading at 511, 1487, 1673 and 413. So my net profit was 5 rupees. At 1:30 again I have recorded the trade, which was giving me a profit of 32 rupees 35 paisa. On the closing basis, this position was awarding me 46 rupees 70 paisa as the profit. How it has come? Say, it's the general assumption the index which decouples in a day, it may recouple or it may stabilize, or this phenomenon should expand. In both the cases, your profitability will increase. In our case, when we have recorded these trades, that time Nifty was drifting down and IT index was drifting up. After 1:30, if you will observe, IT index was positive, it was maintaining in that same positive territory, and Nifty also entered into the positive zone. This is, you can say, the decoupling phenomenon what was exist at around 11:30, it got disappear at around 1:30. Even though it got disappear or it is recoupled, in the contrast, if it would have maintained the same pace of decoupling and this decoupling phenomenon would have expanded, then also this strategy will not award you the loss. The reason is, your 4 choices, 2 choices are sitting on the long side and 2 choices are sitting on the short side. And second factor, these 4 counters are the most active counters in these 2 index segments for the day. Hence, they will dominate the index movement for the day, whatever may be the case. And your action also, proportionality of the long trade and short trade is highly balanced. You have sold the weaker stocks having the dominating volume. You have bought the strongest stock having the dominating volume. Henceforth, this strategy, index decoupling method, will not award you the losses. This is one of the most fantastic method for the intraday traders. We have devised near about 34 different intraday trading techniques, which is got featured in my book on Gann's method. You can find more about all those concepts on that book. Thank you.